So welcome again. This is a still question. This was our question paper, KASNEB CPA Foundation level, April 2022, and now we are on question 3. This was question 1, question 2, question 3. This is question 3 of that paper. So it's April 2022. April 2022 paper, April 2022, and it's question 3, as you can see. So the treasurer of Kite Golf Club has provided the following receipts and payments for the year ended at 1st October 2021. So these are the receipts, these are the payments. Balance brought forward, subscriptions, bar receipts, donations, tournament receipts, competition fees, disposal of course equipment. Then of course we have the purchases, the payments, bar purchases, sales, those are the payments. You need to go through all of them. Electricity, telephone, tournament expenses, sand expenses, competition expenses. Yeah. So the following were the assets and liabilities of the club. So bar payables, bar inventory, subscription in arrears, subscription advance, telephone expenses due, competition due, competition expenses due, course equipment. Additional information that as at 1st November 2020, the following assets were identified at cost. Clubhouse and cost 400,000, fixture and fittings 70,000, course equipment 160,000. Depreciation rates per annum was as follows. So fixture and fittings 10% on cost, course equipment 20% on cost. Course equipment was disposed of during the year for a scrap value of 2.5. The equipment was purchased for 7 million and had an accumulated depreciation charge of 5.6 as at 1st November 2020. No depreciation is charged for the year of disposal. As at 1st November 2020, insurance prepaid amounted to 4.5 million. The insurance expense paid for the year covers the period to 31st July 2022. Insurance for the period to 31st July amounted to 6 million. By income statement is required of us. Income and expenditure statement expected of us, and statement of financial position as at 31st October 2021. So these are non-profit. We are supposed to make to come up with books for the non-profit making entities. For the non-profit making entities, and that's how the question is. So as usual for me, I always jump into the question, but the best advice is trying to create space. The best advice is for you to start with the additional information, work out, especially if you can't comprehend all the information all at once. It's always good to have the same in additional information, work out, and then you'll pick it up when the right time comes. So this was 4 marks. I think this was distorted. This was 8 marks, and this was 8 marks. I think we are good to go. So we'll start with this by income statement. That is the first question. By income statement, make sure you pick the name of the club. So this is Kite Golf Club. So we'll come here and say Kite Golf Club, and then we say bar income statement for the year ended, at 1st October 2021, like that. As usual, I'll have my 3 columns. So this is an income statement. So shillings, 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 and I will restrict the zeros. I will restrict the zeros like that. So then I'll start with the sales. As usual for trading account, we start with the sales. These are club. So we check. Buy receipts 42,000. And let's see if there's any other receipt. But these are the receipts. What the club receipt. These are the receipts. These are the payments. So buy receipts we have 42,000. These are assets and liabilities. They're not telling us anything about receipts. Check the additional information. There's nothing about receipts. So we'll pick it as it is. So sales 42,000. Put it in the outermost column. And then of course we list what the cost of sales. Under cost of sales we have the opening stock. Opening stock. So let's see if we have, I think we have the opening stock. There was, it is here. So by inventory, the opening stock is 7,000. That is in 2020. So opening stock, we have it 7,000. Then we have purchases. Purchases. So let's just come back here and see purchases. So by purchases, we have 27,000. 27,000. Purchases, yeah, purchases and payables will go together. So purchases and payables, these are payables, these are the suppliers. So there's some working here, you can see there's some working here. So this was outstanding previous year, 9,000. So if you go with the accrual concept, this 9,000 was outstanding for 2020. So that has nothing to do with this year. And then this 7,000, it's outstanding in 2021, so has everything to do with this year. So what you are going to do, our interest is to find out the purchases for this year. Purchases for this year. So we are going to take what was actually paid this year, which is 27,000, plus what is outstanding at the end of this year. What is outstanding at the end of this year, which is 7,000. So this gives us 34,000. And then we less what was for last year, which is 9,000. What do we get? 25,000. So this becomes our purchases. And I hope we are together in this. That this is what we paid for this year. This year we paid for 27,000 towards the suppliers. But even after paying 27,000, we still owe them 7,000. Are we there? And then this 9,000 was not for this year. It was for last year, but it was an outstanding for last year, but it was just carried to this year. So if we want to find the actual purchases for this year, what do? We simply take what we paid the suppliers this year, plus what is outstanding for this year, minus what was carried forward from last year. So that is 27,000 plus 7,000 minus 9,000. This gives us 25,000. So we'll come here and say purchases. Just show the 27,000 plus 7,000 minus 9,000. This will give us 25,000. Like that. Then you have closing stock. Of course, closing stock will not have the workings. I saw it somewhere here. Where we got the opening stock, that's where the closing stock is. So by inventory, you can see closing stock. By inventory at the end of 2021, 5,000. So you simply come here and we have 5,000 like that. So this will give you 7 plus 25 minus 5, that gives you 27,000. So this is 27,000. We less, this is the cost of sales, we less from the sales, we get 15,000. The 15,000 becomes our gross profit for the bar. Now, do we have any expenses for the bar? Donations, incomes, no. Expenses, salaries, we have salaries for the bar. Anything. And at this level, we are only interested in what has been indicated as being a bar expense, not any other expense. So electricity, telephone, this one will go to the club. So we are only interested with bar, telephone, competition costs. So bar salaries. Is there anything on bar again? Check specifically. We want something that catches on the bar. So if there's nothing, we say salaries bar. Salaries for the bar. How much is that? 10,000. So this will give us 5,000, and this will be our net profit from the bar. So we are done with the bar part, net profit. That is the end of it. So this should be able to give you the first 4 marks. So we are done with the bar. Now let's move to the second item, income and expenditure statement for the year ended 31st. So we'll come again here and say Kite Golf Club. Kite Golf Club, income and expenditure statement for the year ended 31st October 2021. October 2021. Like that. So we have shillings, and we have shillings. And we restrict the zeros. So now, so we'll start with the incomes, and the first income we have here is, of course, we have the bar income. So bar income, how much is that? It was bar income was 5,000. So we just put it in the outermost column. Bar income 5,000. Then we go to, and I'm getting this from what we have already worked out. So bar income for 5,000. Then we have, of course, the incomes will come from the receipt side. Then we have subscription 83,000. Subscription. Fortunately for the subscription, we must come up with there must be. Let's just come up with our workings here. So we'll call it subscriptions account. Subscriptions account. So let's open this account here. And subscription is very easy. I know it's the hardest part for most of the students, but it's very easy. What you need to do is just ask yourself what is for this year, what is not for this year. So get rid of what doesn't belong to this year and get in place what belongs to this year. So subscription, this is an income, 83,000. Subscription is an income, 83,000. So we always have the starting balances and then we have the closing balances. I want to show the easiest way. Subscription, the income, what was actually paid. Since it's an income, we credit. Incomes are credit accounts. Expenses are debit accounts. So we'll simply come here and say bank account to show that this money is what has hit our bank, 83,000. Like that. Why am I leaving this space? Because there is the opening balances, and then we have the closing balances. So what was received, I'll just put it at the center, and then I will come here and say these are subscription. Let's go to subscription in arrears. Now, these are the 4 items that are normally confuse most of the students. Subscription in arrears and subscription advance. It's very simple. Let's get what belongs to this year. What belongs this year is credit. What doesn't belong to this year, debit. That's the end of it. What belongs this year, credit. What doesn't belong this year, debit. Of course, advance, arrears, you know what they mean. That's the assumption. So I'm just trying to give you a very easy way of looking at it. Now, come back here. Subscription arrears, 2,000. This is 2020, arrears for 2000. Does it belong to this year? No, this is arrears for 2020. So since it doesn't belong this year, push it to the debit side. So you simply say subscription in arrears, how much? 2000. Push it to the debit side because it doesn't belong this year. Subscription in arrears, how much? 3,500. Subscription in arrears, 3,500. This is 2021. Subscription in arrears, 3,500, and that is 2021. So does it belong to this year? Yes, it belongs to this year. So you can say subscription in arrears, because this closing balance 3,500, like that. This is closing balance, this is opening balance. That's why I'm putting them different like that. Then subscription in advance, 7,000. This was paid in advance, but it was paid in 2020. Does it belong to 2020 or 2021? In 2020, it was paid in advance, so it belongs to 2021. So we'll come here and say subscription in advance. Subscription in advance, how much? 7,000. And then this was paid, it's subscription in advance, but was paid in 2021. So it doesn't belong to 2021. It belongs to 2022. So we'll come here and say subscription in advance, 4,500. So this is for 2022. This was for 2020. This is for 2022. And then this is for this year. This is for this year. This is for this year. So then we get the total. This becomes 70, 90, 93, 500. And this also 93, 500. The difference, 93, 500 minus 6, 500, you get 87,000. So this is what we are going to send to income and expenditure account. That's how we go about it. So just get rid of what doesn't belong to this year and what belongs this year. This belongs this year, subscription in arrears for this year, and this was paid last year but for this year. So 3, 5 and 7,000 are for this year. And then this one was for last year. This was paid this year, but it's for next year. So that's how it goes. So this is the figure that we are interested in, 87,000. So we come here, we say subscriptions, 87,000, like that. Then we go back, pick the next. So bad receipts, we have already tackled that. Donations, that's 6,000. Donations, that's 6,000. Anything to reduce on the donations? Donations, check if there are any workings. There's no any working on donation. So we'll capture it as it is. Donation is 36,000. So capture it as it is. Donation 36,000. 36,000. Next. Tournament receipts. Tournament receipts, 11,000. Is there anything to reduce on tournament receipts? Yeah, tournament expenses, 6,000. Check. Tournament receipts, tournament expenses. Anything on tournament? Nothing. So we'll say tournament. Tournament. So we have receipts 11,000, expenses 6,000. This gives us 5,000, like that. So let's proceed. This is getting good. Competition fees 5,900. Competition fees 5,900. There's competition expenses here. There's competition expenses here. Check. Okay, so competition expenses. Competition, we cannot just have it. Competition fees. Assumption is that we are going to have a positive figure, but let's work it out. Competition fees, how much is it? Competition fees is 5.9. So we'll have 5.9 here. 5.9. And then competition expenses. What are we having? So competition expenses, we have 1,600. Then there's something about this competition expenses. Due is 400, 500. Competition expenses due, which means we have not paid. So this is 1,600, what we have paid. And then we have not paid this, but it's for this year. So we simply add, it will be 1,600, what you have paid, plus what you have not paid, but for this year, which is 500, minus what was received from last year, which is 400. So this was an accrual for last year. We are not interested with expenses for last year. We are interested with what was for this year. So we take what was paid plus what is outstanding, what was paid plus what is outstanding at the end of this year, and then we get rid of what we basically adopted from last year. So this is 21 minus 400. That will give us 1,700. So 1,700. So we come here, we say 1,700. This gives us 4,200. So expenses will say 16 plus 500 minus 400, like that. Good. So we are good to go. We are moving. We are on the right course. Disposal of course equipment 2.5. Disposal of office course equipment. Disposal of course equipment. Disposal of course equipment. Now this is a disposal of course equipment 2.5. So it's 2.5. That will be 2.5. Cost equipment, cost repairs. So let's get all these things about cost. This is disposal of cost equipment. So cost repairs will not come here. Let's restrict ourselves to cost equipment. Cost equipment. There's nothing there. Cost equipment 160. Depreciation cost equipment was disposed of during the year. I think this is the story that we are interested in. Cost equipment was disposed during the year for scrap of 2.5. That 2.5 is what we have here. 2.5. You can see the figure 2.5. The equipment was purchased for 7 million and had an accumulated depreciation charge of 5.6. It was purchased for 7 million with an accumulated depreciation charge of 5.6 as on November 1st. No depreciation charge for the. Now this is quite easy. So if this was the value 7 million minus 5.6, it means this is what had the depreciation which had accumulated. So it means the value of this vehicle was 1,400. 7,000 minus 5.6, which is 1.4. So that leaves us with the disposal of cost equipment 2.5, but then the value of the car, less value of the car, less value of the cost equipment, value of cost equipment. The value of cost equipment was 7,000 minus 5.6, which is 1,400. So this gives us 1,100. So that was the gain. It was bought at 7 million or rather, because we have restricted the zeros, 7,000. And then its value had depreciated by 5.6. So it means its real value was 1.4. but then it was sold at 2,500. That means that there was a gain of 1,100. That's what we are capturing here. It is the gain that we are interested in. Is there anything else? Disposal of cost equipment. So I think you are done with the receipts. So if you are done with them, then let's get the total. So this will give us 5,000 plus 87,000 plus 36,000 plus 5,000 plus 4,200 plus 1,100. This gives us 138,300. 138,300. Good. Now with 138,300, we go now to the expenses side. These are the incomes. Now we go to the expenses. It's called income and expenditure account. So let's go to the expenditures. Now the expenditures are we've captured quite a number of expenditures. Buyer purchases we've captured, salary bar we've captured, salaries for clubhouse, that's 6,000. Let's see. Salaries for clubhouse. Any working salaries for clubhouse? Nothing. So salary clubhouse, that's 6,000. Salary clubhouse, 36,000. You can see now where I'm placing that in the inner column. And then we move to the next one. Cost repairs, 19,000. Any cost repair, any workings, cost equipment? No. Cost repairs, I'm interested in cost repairs. There's nothing. So cost repairs, 19,000. I think you've noticed how I'm going. Cost repairs, 19,000. Next. Insurance expenses, 9,000. Insurance expenses, 9,000. My work is getting dirty, so allow me to clean a bit. Allow me to do some cleaning. Oh, this was 2. So it's good to have clean piece of work. So okay. So telephone expenses, 2,500. There was something? Telephone expenses? No, insurance expenses, that's where we are. Insurance expenses, 9,000. That's what we paid. And I think there's a lot on insurance. Looks like I've seen a lot on insurance. Yeah, there is insurance, and we have 2 items here talking about insurance. So this is going to be a good subject. So as at 1st November 2020, insurance prepaid amounted to 4,500. As at 1st November, that's the beginning of the year, insurance prepaid amounted to 4,500. So prepaid insurance is 4,500. Then the paid insurance, as you can see from here, this is payments. Paid is 9,000. Okay, so this is the insurance expense paid for the year covers the period to 31st July 2022, and we are supposed to come up with an statement in up to 31st October 2021. So the insurance expense paid for the year covers the period to 31st July 2022. The insurance for the period to 31st July 2021 amounted to 6 million. So the insurance expense paid for the year covers the period to 31st July 2022. Are we interested in this, really? No. 31st July 2022, it was overpaid because our year ends in 31st October 2021. This one was paid up to 31st. The insurance expense paid for the year covers the period to 31st July 2022. So these guys look like they paid quite a lot. They paid 9,000, but this 9,000 stretches all the way to 2022 July. So this is quite good. The insurance expense paid for the year covers the period to 31st July 2022. The insurance for the period to 31st July 2021 amounted to 6 million. Why are they talking about July 2021, yet we should be talking about 31st October 2021? What's the difference between July and October? We have 31st July, July to August, August, September, September to October. So these are 3 months differences. So the insurance for the period to 31st July 2021 amounted to 6 million. This is getting nice. The insurance expense paid for the year covers the period to 31st July 2022. The insurance for the period to 31st July 2021 amounted to 6 million. So I wouldn't really want to go into a lot of thinking here, because what I'll do is simply looks like the insurance, because you can see the insurance expense paid for the year covers the period to 31st July 2022. The insurance for the period to 31st July 2021 amounted to 6. This is the figure that we're interested in. The insurance for the period to 31st July 2021 amounted to 6, and then like every year they are paying 6 million. So to me, I'll just go with this 6 million immediately. It's the figure that is supposed to be paid on a yearly basis. As much as it looks like this, we have not come to the end of that financial period, but you see, it's like the insurance is running from July to July, July to July, July to July, and the amount they pay for that period, for that financial year, is 6 million. So to me, this statement finishes the whole thing. That the insurance for the period to that first is 6 million. So it means a year is basically what they pay is 6 million, and that will capture everything for me. So I'd simply say that insurance expense is 6 million. The rest I would leave to, actually you can work it out. So, but let's come here, say insurance expense. The yearly insurance expense will now be 6 million, and we remove the zero. So if we want to know, maybe the issue here will be on how much, because we started with the 4.5, that was prepaid. We paid 9,000, that makes it 13.5. The expense for this year is 6,000 as per the additional information. So the prepaid insurance for the following year will be 7,500, and this will go to the balance sheet in the current asset. So that will be the simple explanation I will get for that. I'll give for that particular working. We'll see how it rolls out, but that to me is what they basically mean. So I'll work with this. The insurance for the period to 31st July amounted to 6 million. I'll go with that. The timing is a bit different, but basically what it means is that the yearly insurance payments are 6 million. Okay, so let's move on. We go to electricity expenses. This is insurance, 6 million. Electricity, 6,000. So electricity, there was something on electricity. There's something on electricity. I thought I saw something on electricity. Nothing on electricity here. Electricity. I thought I saw something on electricity. So it looks like electricity, there's nothing on electricity. So I'll pick it as it is. Electricity 6,002. Electricity 6,000. Then electricity 6,000. Telephone expense 2.5. So telephone expense 2.5. telephone expense 2,500. But this one has some workings. So let's check. We need to be very keen. Telephone expense, yeah. So just like the rest, telephone expense, this is for this year, this is not for this year. So 25 plus 750 minus 500. 25 plus 750 minus 500. So I'll simply say 25 plus 750 minus 500. So this is arrears. This is arrears 2021, arrears 2020. Yeah. So what this will give us is 250, 2750. Then we move on. Tournament expenses we've captured. Sundry expenses 1900. I doubt if there's something on sundry expenses. So sundry expenses 1900. I'm not seeing anything. So we'll capture it as it is. Sundry expenses 1900. Then let's continue with our journey. It's quite a long journey, but don't worry. Sundry expenses 1900. Competition expenses, I think you've captured it. Then come back here by payable, subscription, telephone, competition. I think you've captured everything. Now depreciations. I think depreciations, we're here to capture depreciations. So let's capture the depreciations. Depreciations. Under depreciations, we have what? We have fixture and fittings and course equipment. Fixture and fittings. And then we have course equipments. So fixture and fittings, how much is that? 10% of fixture and fittings. 10% of fixture and fittings. We're seeing the figure for fixtures and fittings. The values are here. So course equipment 160, fixture and fittings 70, clubhouse 400,000. Okay, fixture and fittings 70,000. 10% on course, so that is 7,000. 10% of 70,000 makes it 7,000. And then course equipment. But there's something about the course equipment. Course equipment is 160. But we sold off an item valued at 7,000. The original value was 7,000. So it will be 20% of 160 minus 7. We don't have this item of valued at 7,000. So it has reduced the cost. So it will be 20% of 160 minus 7. This is 20% of 153,000. 0.2 times 153,000. That gives us 30,600. 30,600. So this will give us that 7,600. Good. So we are done with that. Remember, cost, you work with the cost. It's you don't work with the depreciated value. So we are not interested with the depreciated value. But we have deducted 7 million because this asset is no more. So the new cost of course equipment is 153,000. 20% of 153,000. Let's go back. Anything again? Course equipment. Anything we are leaving out? We are almost winding up. And remember, there's no depreciation charge here. Yeah, this makes a lot of sense. We no longer have these assets, so we don't have to go that direction. So I think we are done with this part, the expenditures. So let's get the total of the expenditure. That is 36,000 plus 19,000 plus 12,000 plus 2750 plus 1900 plus 37,600. This gives us 109,250. So 109, 250 less minus the 138, 300. That gives us 29,050. 29,050. Good. So what is that? This becomes our surplus. Remember, this is an income and expenditure. We are talking about non-profit making entity. So this becomes our surplus. Now, let's go to the last question. Kite Golf Club. Kite Golf Club. Statement of financial position. Statement of financial position. As at 31st October 2021. Like that. So as usual, we have shillings, and we have shillings. And we restrict the zeros, restrict the zeros. So then what do we have? We start with the non-current assets. And I saw our first non-current asset was the clubhouse and course at 400,000. Clubhouse and course. So this is 400,000. We have not been given any signs of depreciation. Then of course we have furniture and fittings. We just dealt with it. It was the value of 70,000. Depreciation was 7,000, and this was 63,000. Let me hope we don't have any accumulated depreciation. Check if we don't have any accumulated depreciation. As at 1st November, these are the values. Do you have any accumulated depreciation? I doubt. There's no idea talking about accumulated depreciation. So we assume those are the values. Now cost equipment 160. So cost equipment will be valued at 153,000 minus the depreciation for that year. So cost equipment 153,000 minus 30,600. This gives us 153,000 minus 30,600. That gives us 122,400. That gives us 122,400. So let's add this plus 463,000. This gives us 585,400. 585,400. 585,400. So then we go to current assets. Current assets. So current assets. What are our current assets? Get our current assets. Let's start from the top. So of course we have the bank. Bank is 81,400. This figure here. Bank balance 81,400. So bank 81,400. Hope you are enjoying this thing. It's quite good. 81,400. Then let's go. I think we had some inventories. We have started from here. Some inventories. Buy payables. Buy inventory. So this is the closing stock. Buy inventory 5,000. So buy inventory 5,000. Buy inventory 5,000. Then buy inventory is 5,000. Now subscription in arrears and subscription in advance. It is the subscription in advance that will be our asset. This one. No. Subscription in arrears. This becomes our asset. This, we are supposed to have received this, but we have not yet received. So it's our asset. This is our asset. 35. We are supposed to have received, but we have not received. So subscription in arrears 3,500. Subscription in arrears 3,500. Subscription in arrears 3,500. 500. What else? Subscription in arrears 3,500. What else? There was also, there was this prepaid insurance. Remember we got the prepaid insurance? 4,500 plus 9, 13,500 minus the expense for this year 6,000. So prepaid insurance 7,500. What we had paid plus what we paid minus the expense for this year, so 7,500. So prepaid insurance 7,500. Prepaid insurance 7,500. Then what else? I think we are done. Let's work with that. Should we find out that there was something missing, we can always come back, but I hope we are done. So 81,400 plus 5,000 plus 3,500 plus 7,500. This gives us 97,400. Then we go to current liabilities. And these are outstandings. Bar payables, we start with this. Bar payables 7,000. So bar payables 7,000. Bar payables, how much? 7,000. Next, let's get what next. Bar payables by inventor subscription. Now subscription in advance 4,500. This becomes a liability. Subscription advance we've received, but it's for next year. So subscription advance 4,500, it's a liability to us. Subscription in advance 4,500. So subscription in advance 4,500. Then we move on. Subscription advance 4,500. Telephone expenses due. Telephone expenses owing, it's a liability. Competition expense owing, it's a liability. So these 750 and 500. Then I think they're the only ones. So telephone and competition 750 and 500. Telephone and competition. Telephone and competition fee owing. This is 750 and 500. So let's add this. This gives us 5,000, 12,000, 12,750. Less we get, what we get should be our net capital employed. That should be our net capital employed. So let's get the answer. This will be 585,400 plus 97,400 minus 12,750. That gives us 670,050. Now we are almost closing, almost at the end. I hope we get it right. So financed by, we start with the finance by section. So finance by, sorry for that. So financed by, okay. Push this down. So financed by we still have a long way to go. We are supposed to work the accumulated fund. So let's just work it. Hey, where are we going to do the workings? I think let's do our workings here. So I'm going to do away with this. We are long done with that. So let's just do away with this. Do away with this. Do away with this. And then we find the accumulated fund. So the accumulated fund account. So we'll have the debits and the credit, debit and credit. So let's get the assets. Fact is just a matter of collecting the assets at the beginning of the year, that is. That will form our beginning capital. So at the beginning of the year, balance brought forward, so this is bank 20,000. Bank, we had 20,000 at the beginning of the year, this one. And then of course now we continue. The following are the assets and liabilities as at 31st October. This is 2020, this is where our interest is. So buyer payables will be on this side. Buyer payables, these are credit, 9,000. Buy inventory, 7,000. This is stock. Subscription in arrears, 2,000. So this was like an asset. Subscription in arrears, it was an asset to the business. They have not received, like accounts receivable. Subscription in advance, this was a liability. Subscription in advance, how much? 7,000. Telephone expenses due, this was a liability. Telephone, 500. Competition, 400. Also due, 400. What else? Buy payables we've captured. Buy inventory we've captured. Subscription arrears we've captured. 2,000, 7,000 we've captured. 500, 400 we've captured. Cost equipment, this was an asset. Cost equipment, of course, yeah, we started with 154, 400. Yeah, that is perfect. So as at 1st November 2020, the following assets were identified at cost. So clubhouse, 400,000. Fixture and fitting, 70,000. Clubhouse, fixture and fitting, 70,000. Cost equipment, this one was already been captured. It was 154, 400. Depreciation, that one's not there. Cost equipment, this is the cost of the year. Oh, there was prepaid insurance. Prepaid insurance. This was a, if you prepay that was an asset, 45. It is here. As at 1st November, insurance prepaid 45. What else? I think we should be done. So let's try see how it balances. So this is 20,000 plus 7,000 plus 2,000 plus 154, 400 plus 400,000 plus 70,000 plus 4,500. That gives us 657,900. 657,900. 657,900. And then this side we have 9 plus 7, that's 16,900. 16,900 minus 657,900. That gives us, oh, doing my own things. 16,900 minus 657,900. That gives us 641,000. So 641,000. So this becomes our accumulated fund. or accumulated fund. It's basically the assets at the beginning of the year minus the liabilities at the beginning of the year. These are our liabilities. These are our liabilities. These are our assets. Okay. So we have it here, accumulated fund. So financed by accumulated fund 641,000. And then of course we have surplus. Surplus was with no drawings 29,050. Profit balances 29,050. And voila, there we go. It has balanced. There we go. So this is done. Net capital employed. Good. 670,050, 670,050. That is the end of this question. Thank you so much. It has taken us quite a long period of time. You should take 30 minutes for this question. Of course, it has taken me time because I'm trying to go slowly by slowly to explain everything. But for you, because you'll not be explaining, 30 minutes should be good enough for you. Thank you. Let's meet in question 4 below, just after a few minutes. Thank you. Welcome. Subscribe, share with your friends. It's always good to share. And come and enroll for our classes. Thank you.